Ladies and gentlemen of the crypto space, we're live on a Friday, April 26th at 3:26 p.m. Late day. I had a busy day at the office, and I have a busy night. My father-in-law is in town. I get to spend time with the family. Now, I've seen some crazy shit in my day, but my father-in-law is in town, so he sees some crazy Chit in his day. That boy got the accent. So I figured that was on my mind. That's the title of the stream. He's lived through some crazy shit in his life. And he's told me some stories. I find it over so interesting. And I understand the best I can the economic history of the 70s in particular with regard to currency crises. And obviously, we had complexities in the early 2010s. And that's where we are yet again, except the composition of debt is significantly different, and that has a variety of implications. Could always draw on history, and Lynn Alden is the best place to go to for those kinds of stories. For my limited monkey brain, I basically understand things in terms of causality, and I'm amateur, armchair economist here. This chart is an absolute catastrophe. This is the yen. And the yen is losing value. This is the dollar versus the yen, so the dollar goes up against the yen. Yen's falling in value. So that's a complexity. People in the United States don't understand this because everything is dollar denominated, and the dollar isn't historically weak; it's historically strong. And in any case, when the dollar is appreciating versus the yen, everything that is imported in terms of dollars is more expensive because if you're buying something that costs dollars, you have to first buy the dollars to buy the thing that costs dollars, dollar denomination. And that means this is literally inflation in Japan. And it has broken through historic levels, and they can't defend it. There's no way to defend it. There's no way for Japan to turn this off. This is one direction only, unless they stop importing things, unless they don't need the things that they've been importing forever, like energy. So the reason that this goes up is because one, it's self-perpetuating, and two, the carry trade, where you can borrow for basically 0 to 0.1% in Japan and give it to the U.S. government for 5+%. Or just throw it in a money market and call it a day, and you're making 5% on cash. And the yen is probably getting cheaper. So if it's getting cheaper, you're literally making 5% plus all the currency spread when you finally repatriate your depreciated capital or your appreciated capital in yen terms. This is a very precarious direction at 1.36% on the day. Japan's currency has depreciated 1.36% in one day. There's a couple. First and foremost, the thing that comes to mind is they sell their United States bonds. Was 800 to a trillion? I don't know. Just shooting from the hip there, armchair economist style, baby. So they sell their stuff, their U.S. Cash equivalents, as they're called. Oh, there goes U.S. interest rates. It's going to get pretty spicy because the whole point or the whole arrangement or the rules-based order of the planet is that Japan basically is a major recycler, or they sterilize, or they just buy, that's what those two words mean, U.S. debt. And that has historically kept our debt expensive. As we see here in let's zoom out please. Zoom out please. I can't do those 30-minute charts on most things. As you see here, is the most expensive U.S. debt has ever been on March of 2020 because everyone was buying it. It's literally like a frenzy. And now the world is different. Globalization has swiftly started to reverse, but that shit takes 10, 15, 20 years to really repatriate supply chain and whatnot. So it's starting at the margins, and the margins happen quick because of the debt to GDP load of countries. They did the fastest rate hike, and now countries are scrambling to come up with the dollars to pay interest expenses. They owe money. The whole world owes money, but guess what? They don't owe it in their currency at the core. They owe dollars. So listen, that whole argument of, oh, they're going to stop using the dollar. Okay, great. Uh, I borrowed 100 mil, let's say. That'd be pretty cool if I borrowed 100 mil. Just saying. And the guy who I borrowed it from, or the bank that I borrowed it from, or the country that I borrowed it from, that motherfucker wants $100 million. That boy lent me dollars. He wants dollars. He doesn't give a shit that the world's changing currencies, or that's a circulating argument. He lent money. He wants money in the particular denomination of currency units. So that's the biggest misunderstanding that social media has with the current status of the system. Dollar demand is ferocious, and you see that in the DXY, which is just up only. Go into 6 month, and you're like, oh, that's what he means. It's literally been up only since 2008. Boom, boom, boom. Yeah, blow off top. But look at what the recent activity is in 2024. First H1 2024. It's like a previous resistance, flip support. Previous resistance back in 2017. Retest, flip support. There's a heck of a region of congestion right here, these two green lines. And boom, there's a perfect retest, flip support on 6-month candles. This territory that we're in puts us in basically .com and 85. It is very reasonable to state, like Plaza Accords 35.0, or some sort of geopolitical collusion is required to get these currency markets under control. With the interest rate spread between Japan and the United States being basically 5+%, there's literally no reason to not sell yen for U.S. debt instruments because it's risk-free, dollar denominated. And other interesting things come to mind with regard to cryptocurrency markets, global composition of currency. But suffice it to say, it's interesting and imperative to understand things that move the system. This is something that moves the system. This move, in the end, moves the system because they're one of the largest holders of U.S. debt instruments. Therefore, as their currency is under pressure, they're forced to sell their debt instruments at some point, U.S. debt instruments, to buy their currency. But they only have a savings account. There's X amount of dollars that they can acquire by selling their U.S. debt. So that's only a kick of the can down the road. Now, the problem is, historically, what is the way for a globalizing world to acquire dollars so they could buy their currency and balance their, the spread, the currency spread with the rest of the world, the FX markets? You buy things with exports. If you want to buy dollars, export $1 billion worth of refrigerators or computers or what have you, and that's buying dollars. So and that's complicated because there's obviously input costs that go into the manufacturing of those things. Hopefully yen denominated and not dollar denominated. Then it just gets messy. But that's how you buy dollars. And with the deglobalizing world, that whole mechanic is changing, which means over cyclically in the years to come, higher U.S. interest rates, which literally is heading towards a great complexity with regard to domestic economics. I don't have it here, but basically I was looking earlier at like intersections of the 99% versus the 1%, and then the 1% own more assets than the 99%. So we're getting into disparity, extremes. So it's going to continue. There's no solution to it. And that's why you see these programs of like 44.6 or whatever the hell it is, capital gains tax rates and 25% wealth tax, which doesn't really make any sense, which is what everyone's argument is. But these types of things not only aren't solutions, they make things worse because they don't fix anything. They literally just make it worse, and they create animosity. And that animosity festers and spreads, propagates virally, especially now with social media, and it manifests violence, as we see everywhere with all the protests and the way social media has the capacity to spread messages. The violence is, things head in one direction or another. This is a basic rule of nature. I like to say you're either getting fatter or skinnier. You're either adding weight or losing weight. Doesn't make any sense to static. That doesn't exist. Your body's always losing water, gaining water. You take a poop, you lose weight. So the whole point is, there's no such thing as steady state anywhere. Everything's about balance, equilibrium, homeostasis, and stuff like that. So this directionality of everything, all the way from the currency markets, the FX markets, to the debt markets, to the global composition of currency, to politics, people, and their opinions of how things can be done better. It's all changing. This is a period of extraordinary change. And a lot of folks would say it's like fourth turning. And that's where we are. And it's accelerating quickly to the tune of a 1.36% devaluation of one of the largest economies on the planet in a single day. You know what works? Maybe the U.S. will buy the yen, which then they could use those dollars to, I don't know, that would set a de facto floor. Like if the U.S. backstops the yen, and then then Japan could use the dollars to buy U.S. debt, which would be JQE, literally Japanese quantitative easing. I mean, that's literally what it would be. Quantitative easing done by the central bank, the Fed, the United States Federal Reserve. That's the same mechanism that occurs and has occurred for decades. Other countries, nation states purchasing from the market, balancing supply and demand. And when the Fed had to do it post '08, that's because there was a weakness, a decreasing trend of other currencies purchasing the debt combined with greater and greater debt issuance. So once again, the directionality is spiraling in the wrong direction with higher lows and higher highs on interest rates. And that's arguably where we are. If you look at the 10-year, clearly that structural trend is broken, and this data goes back to 1913. Went up, blow off bottom, a breach. Now you get above, you see a 6-month close, basically any higher than where we are in the 10-year, like 4.8, and that is just further confluence suggesting this is a precarious directionality that everything is heading structurally. Now comes the bad and good part. Because of the way things are heading structurally, the global currency supply has to expand significantly, both in debt terms, because debt is money, and currency terms, because money creates currency. Money prints currency outside of the U.S., traditional Eurodollar market. So the amount of debt they've been issuing finally finds itself into a condition where the rest of the world says, all right, I got a whole lot of debt, and maybe we have a cyclical appreciation. Maybe a couple of stock markets around the world start to pull down. You know, they demonetize the stock markets in order to monetize debt financing. And you see a support on like the 50 SMA on the 6-month chart, about 3.3%. That would be significant appreciation in these money equivalent instruments. It wouldn't turn off the carry trade in any meaningful way because it basically had 0 to 0.1% over in Japan. And your collateral just appreciated. So if you have a bunch of collateral deposited on Aave, yes, the crypto protocol, and it just went up 30%, what does your health factor look like? Health factor just went from 3 to 5. Now you can borrow more. So when you do that to the world, you're talking about, 10 to 1 to 50 to 1 is something I like to say on collateral. And how much collateral, how much brand new collateral is going to be issued in 2024? This year, ladies and gentlemen, $10.8 plus trillion. So let's say, aside from deficit spending, is $10.8 trillion. 10.8 trillion, 10 to 1, it's $108 trillion. 50 to 1 is 540. Yeah, $540 trillion. So basically, the conditions are there for 100 to 540, 108 to 540 trillion dollars to be added to the global currency system, the tapestry of global currency this year in 2024. And it will only get exacerbated by all the shit that they're going to have to figure out and finagle from a geopolitical perspective to keep the gears of the system turning. And what does that mean, the gears of the system turning? If this direction for Japan is not alleviated by an external actor, this cannot be fixed in Japan. You're talking about collusion, a trade deal, or just a negotiation because Japan, nobody, the U.S. especially, doesn't want Japan to sell their U.S. debt. That would cause a structural imbalance in the treasury markets, or whatever denominations, whatever tenor they have of debt instruments. So it's an unspoken threat. If they have to do it for reasons of, why do people do anything? Existentiality. They don't sell it to buy their currency. Inflation in Japan is probably going to pick up really, really strong. Let's go back to Japan and see how it's moving. Wow, 1.43. It's just going. It's going. It just broke out. Look at the 30-minute. Did it print a new higher? That's a fresh higher high. It's been a couple hours, 3 hours we've been waiting, and boom. Oh my God. I'm telling you right now that this is right now there's people on the planet right now sitting next to red phones, and red phones are ringing. What are we going to do? Because currency doesn't move like this. Currency historically moves basis points, maybe over 10, maybe. Currency is supposed to be slow moving, relative stability, nice, fluid, cyclical capital flows in the system, trade balances, reasonable NIIP, net international investment positions, and not, it's, surpluses versus deficits, trade surplus versus deficits, reasonably balanced. There's no balance left in the system. This shit is heading in a weird direction. Stranger Chit is going on. Some strange cheat. Where's my father-in-law? He would get a kick out of that cheat. Yeah, so with regard to like crypto, I don't know. I'll answer all you guys' questions. 121 people on the stream between X and YouTube. Get in the comments. What's on your mind? I'm more than happy as always to go through a Q&A all the way to the bottom. I answer everyone's questions. Bitcoin is basically flat. Bitcoin is basically flat since oh goodness, that's the 30-minute. Let's go out to the monthly and see where we are. All right, it's flat for the month. This has been a wild ride in 2024, at least since Q4 2023, and still remains at a significant premium from a weekly perspective. None of this has been depreciation. So folks, like new folks getting into the market, seeing like 70,000 Bitcoin, it breached the all-time high briefly, but seeing a retrace to like 59.7, this is nothing. When you see it in perspective, from a technical perspective, it was barely a retrace to the time-weighted average price on the weekly. We go into the daily, obviously pushing towards the 100 SMA on the daily. These are barely mean regressions. These are relatively weak mean regressions. You want a big mean regression, look to the time-weighted average price on the monthly, and we'd see it at 37. So right now what we have is an expression of strength in the market. Maybe it goes down towards the 37. If it hits 37 and bounces, and towards the end of the year we're at 75, 80, 90, that's a remarkable expression of strength. It tells a hell of a story. Because at the beginning of the cycle, Bitcoin was at 15,000 and it bottomed at 38, bottomed at over 100% gains. That's a remarkable cycle. got to drop the bias of the crypto market versus traditional equity markets. These numbers that you see in crypto markets are absolutely extraordinary, 100%. And of late, we see these insane kinds of moves in equities, but you're not going to see Amazon double in 6 months, in a year. It doesn't work like that. So these types of numbers are absolutely extraordinary to be able to witness, inspect, and understand the mechanics, the incentives. Well, either you're directly incentivized by someone giving you compensation, vote rentals, or you're incentivized indirectly. And the incentive for Bitcoin, obviously, is the whole conversation. Immutable monetary policy, deterministic monetary policy, censorship resistant, confiscation resistant, and those are the incentives. Big incentives in a world where they want to tax you 45% on capital gains. In Cali, that's 60%. If that change goes through, 60% tax, that's crazy. So the whole structure of the system is changing, and it's going to get very, very weird. What's green today? FBTC and Curve, apparently, on my watch list. Flat, at least flat. So, but not down is a very interesting thing, as we've discussed. S&P 1.13% of the day. Jeez, jeebers. Russell 2000 1%. Everything's moving. Look at that. NDX 1.84%. Wow. Wow. DXY back over 106. Let's go out to a 3-month, get some perspective. Dollar goes up. Countries around the world are going to, they already did fail. If you remember in 2023, plenty of African nations failed. Crises, catastrophes. We even managed to blow up England. Bank of England had to bail out the gilt market. Remarkable. So countries fail. And it forces them to monetize, rebuy, repurchase, ease, or outright print. Because nobody is going to sit through Mad Max without at least financing social civility for a modicum of time, attempting to stabilize things and prevent civil unrest. At some point, civil unrest becomes financed. And that's where we are. We're at the point where everyone's financing civil unrest, and it's kind of failing, which is understandable. This disparity is raging. The few that have the assets are in a much better off position than the overwhelming majority that literally have nothing. So you could always have the argument like, oh, everyone should learn to invest. Everyone should be an investor. No. You can't go back. You can't teach everyone. It's either within someone's capacity or it's not. There's no fixing it in hindsight, thinking about the things that got us to where we are. As a manager of capital, you and me and everyone that hears these types of thoughts, today is what matters. Not necessarily how we got today. It's to today. It's important to have that as context. Lynn Alden's type conversation, the history of money and economics and governments that mismanaged everything. So the history is meaningful how we got to today to a degree, but today is what matters. The choices and options that you can make today. So that's what we've been discussing for a couple of years. What are your choices and options? And there's very few, which highlights the most obvious choice, which is what we do and engage in these crypto markets. It's the only choice there is. There's no other choice. There's no other options. There's no other opportunity. And that's from a prudent, restrained investor. There's nothing else that makes sense to invest in, comparatively speaking. Take that to the bank. Because I'm not invested in the fucking bank. No way, no cheat. I don't invest in those fuckers. It's a shit investment. You know why? Because they don't pay you. That's the most important thing with regard to an investment. Fuck you, pay me. Don't forget that. Because that's what the way it should be. You buy a stock, you're giving them money. That's meaningful. What are you getting for that? You buy something in a store, you're getting the item. You buy a stock, most of the time they're giving you shit. Complete Chit. Motherfuckers think we're going to buy their stock and give us nothing? That's crazy. Pay us. Otherwise, you're not getting any money. And that is a mindset of a little bit of a predator, venture capitalist. You want our money? You want us to invest in your company? No. What are you going to do for us? What are you going to do? What's the kickback? What's the bonus? That's it. There's no more you can't do it to yourselves anymore. You can't. You can't continue to fuck yourselves over by buying their bullshit. Invest in a way that serves you. It's your rules. It's your capital. So you better expect to get paid. I don't give a shit about appreciating prices so I could sell it and dump on a community. No! Pay me when? Next week. All right, okay. I like that. That changes everything. Anyway, so trying to paint the picture today. In a certain mood. Did a lot of work this morning. A little tired, a little hungry. And let's hit the comments. Very light comments, very light stream today. Not many people on. Obviously, it's in the afternoon. Rob's in the house. First stream, first time welcome. Any questions? I answer all questions. You're on X, you're on Twitter. You're on YouTube. Throw your questions. Excuse me. You're hanging on to these crypto markets? You have thoughts and ideas of, I'm afraid. I'm excited. I mean, I could tell you all that, yeah, it's volatile. Okay, we go through meme season. Let's digest the common arguments. You go through meme season and you see kids, novices, or relatively veteran, experienced persons capitalize significantly. Do you have to engage in that behavior? If you don't engage that behavior, are you missing out? Do you feel a certain way, like you didn't live up to expectations, maybe your expectations, maybe family's expectations? Are you disappointed? That is an emotion to get over. That is something to understand, but it's not something to think is the only way to engage with markets. You can be conservative. You can be an adult. You can be rational. You can take pause. You can look at crypto markets as someone with maturity and not someone like Bluebird with balls, bird with balls. That was a cute meme. Meme coin, bird with balls. All right, he had a giant set of nuggets on him too. It's pretty wild. But that is not an investment as we define it. Oh my God, so look at the markets maturing. It's a lovely place to be. I don't give a shit how volatile it is because I'm coming from 2022 when FTX is exploding and Celsius is dropping bombs everywhere. 3 Arrows was just spray and pray. And portfolio is very healthy. It's all relative. It doesn't matter that it was higher a month ago, a month and a half ago, 2 months ago. That doesn't matter. Why doesn't it matter? Because that's what everyone thinks. And what everyone thinks is wrong. Because everyone doesn't make it. Few survive. The only way to survive is to think different. And the first thing to realize when you think different is the way most people feel with regard to emotions is wrong. Or at least not self-serving or sustainable. Or probably not even rational. So, it's worthwhile. Think different. Topsy's in the house. Hello, Friday enjoyers. Good morning, Noah, my friend. Much a pleasure. Welcome, as always. Today marks the first day I spent curve revenue for our meat space. Bill. Excellent. It changes everything when you finally digest that and think about how to manage accounting and you put everything into an organized type of organization. Because that's what it is. If you're investing in crypto and you're tracking your capital and managing it and investing and taking in the salary and income and deploying it in consumables so on and so forth, and reinvesting, you are organizing. You are a self-realizing organization. You are organizing these activities. So that's massive. It was years ago that I think I talked about the first thing to do about the crypto space is get a damn crypto debit card and get USDC and put it on the debit card. The first thing to learn about the crypto space is how to spend it. And that I love when something is like, what? Everyone's like, what do I buy to make money? No, learn how to spend it because that is the point. How are you going to know why you're doing what you're doing if you don't know how to spend it? The whole point of all this activity is to have capital to spend. So the easiest thing to do is to spend it. Fortunately, crypto markets are dollar denominated. Fortunately, there's dollar currency units. So it's relatively one for one, so you might as well experience that process. And then once you learn how to spend it, you're like, all right, how do I make it? And then you're like, oh, you could bucket capital and do different things with capital and be strategic and bop and weave like a boxer, boom, float like a butterfly type shit, type Chit. You could be aggressive. You could be conservative. You can make mistakes and survive because you didn't go overboard. Because all that matters is survival. When the tapestry of global currency expands, you're not going to have anything to do but sit back and be in awe of like, holy shit, it's happening. Trantaloid's in the house, much a pleasure. Tapsy said he's been here for 3 years. Yeah, my man, have we been doing this 3 years? 146 people on the stream back in YouTube days, smaller than that. Now we got X going on, and a lot of new people, and that's nice to see. But folks, all new folks, we've been doing this for years. We've been talking since 2021. That was crazy. And we didn't do it in 20, I don't think. But 2020 was even crazier. And most people don't remember 2017. And 2016 was getting there, and then it really hit in 2017. And nobody remembers 14 and 13. That's very few. But this is a long time coming where we are. This does not just pop up overnight. And the reason I have a great deal of sentiment that I have is because I know where we came from. So as I said earlier in this stream, you got to know where you came from to understand what the hell's going on financially. And when you have that perspective, you have context, and you're like, holy shit. And that's kind of the realization, a revelation that I had in like 2021. And then 2022, I really started to solidify the rules and really like organize. And it was remarkably, like no one's ever seen anything like this because this is money. And then once I saw all this shit, and I was like, oh, this is how global financials works. This is what money is. What is money versus what is currency? Because they're not the same thing. And then I know most people don't understand money, and I was like, what is money? And a lot of the stories that we've told over the years. So you can't understand crypto without understanding all the stuff we talked about. Because that's why this stuff is crazy. Why do you think they're fighting it so hard? AML, KYC. In which country? Which country are you investing in? So what rules are applicable? What if you invest in a country that has no rules? But there is no country because it's software accessible from all countries but of no country. What the hell does that mean? So that's why everyone's kind of having a bit of a seizure or some pick an ailment. Well, these politicians like scrambling. What does it all mean? It doesn't fit into a regulatory regime. This has nothing to do with the United States. It has nothing to do with Britain or China or Australia. This is of no nation. This is to be adopted by a nation. So what really plays out from here, based on my understanding of the brief glimpse of financial history, Britain and UAE, That's what I see playing out. So Britain is where forex markets were created. Global currency exchange, and then derivatives, and then the euro-dollar market. Britain is going to take the crypto space by the horns, put a headlock on it, and be like, come home, make us money. Because that's what they historically do. And maybe they won't, and maybe they don't this time. Okay, someone else will. And that's where you're investing. So maybe we should all be filing like foreign bank account documentation reporting. Because it's surely not capital. If you have capital in a hosted wallet, it's not capital in a U.S. account. It's kind of expatriated capital. That's a big deal. It's capital outside the system. Inside money versus outside money is like Arthur Hayes talks about. This is outside money. It's not within the regime. Kind of no one really knows what it's doing, and you got the chain analysis and stuff like that, and they could do plenty of research and investigations. But it's not like, boom, report, and everyone gets their information sent to the regulating authorities. 1099 this, W2 that. Boom, all that information going to them so they could call you and ask you, hey, you owe us money. Pay us. So that's why they're freaking out. But then interesting questions arise. Where's your capital? Is it domestic? Are you paying import taxes on your capital? What does that even mean? These are offshore accounts. But offshore accounts accessible to the general public without KYC? It's like, boom, offshore account. So very interesting systemic and structural questions come into play about what's going on here. Regulations of what country? It's a very interesting question. And of course, every country is going to be like, oh, my regulations are better. And that's like the Hardy Boys from South Park. I got a raging clue. My regulations are better. I got the best regulations. It's really awkward when you see politicians try and push certain talking points, certain agenda items, and it's like, ew, you're awkward. My regulations are better. It's really weird. Oh, I'm going to regulate that. Anywho, I think everyone will get a good kick out of that. I cracked myself up. Trendaloid in the house. Era's in the house of pleasure. Killers, good afternoon. Irreverent Nexus. Howdy, Cap. You still looking for that Discord Arbitrum payment solution? Yes. No. Yes, it's cool, but no, because I really like, unless it's P2P, but then P2P is like, I really want to run the software myself, and I don't want a third party taking a cut and shit. Because I like credit card processing, debit card processing, and I'm really big on Spritz Finance. And I've been posting about, I'm probably going to post them even more and throw up a bunch of referral links. I think their software is crazy. Virtual debit card that you can load from Arbitrum, Optimism, and Base. Crazy. Spritz Finance. That's crazy stuff. So I'm like, all right, so if I'm requesting credit debit to subscribe to Discord, all right, use my referral link, go over to Spritz Finance and throw it on a virtual debit card. Boom. Virtual debit card and boom, pay. Boom. It's really super duper simple and easy. So as much as that day will eventually come where you can make payment crypto denominated, in the meantime, there's great payment rails that have already been built. And that is so important to digest because it didn't exist in 2019. Didn't exist in 20. Didn't exist in 21. There was barely BitPay in 2000, maybe late 21, 22. And that was still flaky at best. We could buy gift cards. Oh my. But now, no joke, you could literally load a debit card in 30 seconds with USDC. And it's backed by a checking account. And you can do it from your phone, sitting outside of a 7-Eleven. I need $10. Boom, boom. Walk into the store. Boom. Done. It's like seamless. It's really wild. And like Tapsy said earlier today, early in the stream, made your first payment. All right, great. When you streamline that process to the point where you're like, you know what to do, you know what buttons to click, and you could just do it in 30 seconds, pop it on a card, and boom, then you're like, oh, that's crazy. And that's why I said all those years ago, the first thing to learn is how to spend it. And then you're like, how do I make it? And then you're like, how do I keep it? Because when you don't have money, you're always thinking, how do I make it? And then once you make money, you're like, all right, how do I keep it and not lose it all? And that is the progression of it for everyone. That will be the progression for everyone. Hope that helps. Where were we? Irreverent. I appreciate the sentiment. Um, I'll circle back around to it. I really, as I said, the spritz I think is probably the most interesting thing for me to push. I'm just and I use Juno as well. Like Juno is literally like a full bank account. Spritz isn't necessarily a bank account, but obviously they have banking partners that facilitate the virtual debit cards. But both of those products, Juno and Spritz Finance, that's just great experiences with those products. Killis, wow, I need this pep talk even if I know it. Well, the world is an absolute mess. Financials are an absolute mess. Japan is experiencing a currency crisis right now. You know, it's like, it's surreal when a crisis is occurring. And you're like, is this real? What am I supposed to be doing? Because a crisis doesn't happen every day. So you're not, and that's what leads to like shock. You're like, is this really happening? And that's right now. It's literally a crisis. You can't have your currency behaving like that. It causes all sorts of financial distortions for a long time to come that have knock-on effects after knock-on effects, and they're forward-looking indicators. So it takes time for it to literally cascade through the system. And if it just did, 1.3 something percent in a day, what's it going to do tomorrow? Is it going to all of a sudden magically appreciate? Why? So why is it depreciating? It's going to keep depreciating. 1.42%. It's literally just going down. It's like they're abandoning the yen and saying, give me U.S. debt, give me U.S. debt, give me U.S. dollars, give me U.S. debt, one or the other. Whatever it is, and as long as it's not yen. Holy crap. That's crazy. 1.42% in a day. Anywho, always a pleasure to talk about these things. Tapsy, time flies by, but we're consistent here. I love that part of this stream. That's everything I've talked about since especially 2022. The things that I own, the things that many of you own, will be here in this year, 24, 2 years later. We'll be here in 2028. We'll be here in 2032. We'll be here in 2036 because we have chosen core parts of the portfolio that are immutable as long as Ethereum exists. So that's big. That doesn't exist in the real world in the same way because there's not the same degree of decentralization. Like there's literally Ethereum nodes working all around the world. Or at least there's a capacity if there's a deficiency in nodes in one part of the world because of regulation or intervention. All of a sudden there's opportunity in another part of the world where there's less friction and less regulation. Friction arbitrage, regulatory arbitrage, and bam, you get the network built out on the other side of the planet, which is exactly what happened when China banned Bitcoin mining. Boom, it's sprouted in the United States really quickly too. So there's a great deal of resiliency, which is a software engineering concept. And this is software, so there's a great deal of resiliency in this network. Another software reference that is not the same for Meat Space Enterprise. There's so much shit in each Meat Space Enterprise. I can't deal with that Chit. I hate that Chit. No, 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 no. not equities. Um, Anywho, what was the point of me saying that? I don't know. I don't know. It's interesting to think in terms of 4 year cycles. Like I'm mostly thinking about like 2027 right about now. Like I know what's going to happen in 2020, Q4, 2024, 25. It's going to be interesting. It's going to be freaking volatile getting there, but what's coming in the short term is pretty baked in the cake at this point. You don't really have anything on the horizon thinking about where we're going to be in 2027. You can't really see it. But that's cool in a regard because the software will be there. Is the software going to be used more or less in 2027? Do I really have to sit up close to get you guys to think about that one? Is this software going to be used more or less in 2027? As I jam my forehead into the camera. Oh my God! Isn't it obvious it's going to be used more? It would be really weird. Yeah, let's, pack it up, let the genie out, but let's get it back in. We don't need this stuff. You know, we need better banking. We need to invest in stocks. Yeah, the world is changing significantly. Tapsy, I studied cognitive neuroscience back in the day. Wanted to do economics, but now I still get to learn about it. I didn't go to school for economics. I went to school for electrical engineering. Ended up doing software engineering as a career with no software engineering education. And now we do economics. Self-taught, autodidact economics. Fascinating. Nowhere near the capacity of the greatest macro folks. But if you listen to the greatest macro folks, come up with your own ideas. And that's what we talk about. Hope that helps. No is in the house. Hey, Cap, no. Yes, my man. Irreverent Nexus. Thank you. Appreciate it. Makes sense to me, Chief. Appreciate it. A lot of my friends are hyped about Spritz. Big deal. Serious software. Appreciate the thorough answers. So much is different from 21. A lot of cool ass info out here now. Absolutely. Y'all remember like Solidly's launch when Andre got launched on Phantom? It was a disaster. And then multi-chain hit. It was a double disaster. And that was a ghost town. 23, 22, and 23. Absolute ghost town. Sonic's coming. Phantom's big tech. Andre always had the biggest ideas. He should have deployed them, but he did always say he was testing in prod. Probably should have tested in prod more like how Curve does it. Seems much more reasonable the way they do it. But that's irrelevant in regards. His ideas were brilliant. Each and every one of his ideas were and are brilliant. And they're changing everything. Garrett is a remarkably stable organization with income and balance sheets and literally infrastructure. It's a big deal. Phantom is an entire network with groundbreaking properties, Sonic especially, and Solidly forks are everywhere. They're at the top of every volume chart for each chain, respectively. Changed everything. Very interesting. Peering through the bullshit. Bullshit is, I'm not touching Solidly. That was an absolute disaster. Oh, Yearn. Oh, all they do is dump, 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 dump. Maybe there's a different way to look at things, ladies and gentlemen. That's what we do. We look at things differently. Bosan? Hope I got that right. Does it connect with Apple Pay? Yeah, of course. Spritz, Juno, you literally just boom, put it in your wallet. I use it on Samsung Pay, Google Pay. It's a debit card. It's literally a debit card. But that's just the tip of the iceberg. I have so many payment solutions I post in our Discord. By the way, shameless plug, we got a great Discord, a rational community. I probably should post more. I just recently reconfigured it a little bit for a free channel where anyone could talk, and I'll get it out there where people could just join. It's completely free. But I did isolate premium members. Premium members cannot access the free channel. And obviously, the persons in the free channel cannot access the entire stack of channels. There's 3 years worth of conversation in here dating back to the heart of the last bull market. So I think it's an interesting reorganization of Discord, and I promise I'll get on X and I'll post it a bit more. Yeah, it's a big deal that you could put instantaneous debit cards in Apple Pay, Samsung Pay, or Google Pay, and boom, throw USDC on there in 30 seconds and swipe, boom, done. It's crazy. So the first thing to learn about crypto is how to spend it, because it is much harder to make it and keep it, as some would say. The general public would say, oh, it's so easy to make it in crypto. So let's say the opposite. It's hard to make it. And it's even harder to keep it. Rather than it's, I don't know. You know what the general public says, and the vast majority don't make it. They lose all their money. It's something that I wish could be a little bit different. Irreverent. No, you mentioned on stream a few days ago that now is a great time for investing since now is not a great time for investing since everything is at a premium. What are your thoughts on trying to allocate into curve or V curve position? So, you find curves at a discount, and it's my largest position. Based on my rules, there's very few things at a discount and curves at a discount. It's kind of as simple as that. Curve is paying anywhere between 20 to 40, maybe even 50%, depending on position size. 20% is paid in cash, stable coins. It's pretty crazy. You throw 100 grand and you make it 20 grand a year. Obviously, the 20% is variable APR, but it's obviously gone up because of the expansion of CRV-USD, which is changing the entire nature of the Curve Federation. And it's the most hated crypto protocol in the entire crypto space. But it hasn't gone lower, which is fascinating. Why is that fascinating? Because you're not investing in this for it to go up. Because that is something that most people wouldn't say. You're investing in this for a percentage sign. And the likelihood that that percentage sign will still exist in the future. And this is not how you get rich. This is something that could facilitate you getting wealthy. A good example of that is, and I know these are relatively large numbers for the vast majority of the public. Let's say 100 grand and maybe it goes down to 40 cents again. And it starts to trickle up. Because if you go into the monthly, you can see you do have your moving averages here. And we tried to push through the time weighted average price to 10. And was that the 20 week or something like that? 20 month, whatever that orange line is. But there's a congestion zone of moving averages. And it just doesn't want to go much lower. So let's say it doesn't. Obviously it can. But you got to think optimistically. And it doesn't. So 100 grand, 20 to 40%. I make probably like 35, 40% for the last like 2 weeks. So you're making 20 to $35,000 a year at current APR rates. Cash, paid weekly. So obviously that's annualized on a weekly basis. But last week it was 20%. The most previous week, this past week, there was a bit of a dip because everything is obviously quiet. But when we see the potential for expansion of that APR with the increased consumption of CRV-USD debt products, that contributes to the Z component of the XYZ equation we talk about. There's a great likelihood it's going to continue to produce revenue into the future. Your revenue is going to fluctuate as the market fluctuates, as volume in the markets fluctuate. But there's one thing that's the biggest product in the entire planet, and that's debt, credit, the ability to borrow against assets that you own, access equity, which is what everyone does with home equity loans, home equity lines of credits. It's what you do with a credit card. That's uncollateralized debt. It's what you do with a mortgage. That's a collateralized debt instrument, not the down payment, the house. your house is collateral for the debt on a mortgage. So seems like mortgages are popular products, and those are collateralized loans. Go figure. Um, so those are the types of products that I think are going to be the most interesting in the decade to come. So 100 grand deployed for $20,000 to $35,000 a year. Let's say in the coming year, curve gets to almost the all-time high. Let's say it doesn't break all-time high, and this is the shittiest product in the crypto space. So curves at $4. Never breaks all-time high. You just went from 44 cents to $4, 10x on the money. And then it comes back down. Now let's say maybe it hits a moving average somewhere around here. And the next structural low in end of 25, 26, it's like $1. All right, so $1 from 44 cents, 120%. 100 grand turns into 200 and change, and you're making maybe 20 plus percent. It was 20%. 20% on 200 grand. 40 grand a year. So yeah, number go up and number go down a lot. But 20, 30, 40, 50 grand a year changes everything. The bias is because traditional finance has screwed everyone over so badly, especially through the 2010s. 0.1% interest. Realty Income Corporation at 4.2%. REITs, 5%. Government debt just finally got the 5%. All right. Who's the guy? What is the whole story that I tell you guys? Fuck you, pay me. No, you want me to invest? Pay me 20, 30, 40% of the money. And guess what? At some point it dilutes. So let's say it gets really exciting and interest rates on curve get up to 100, 200%. So maybe people want to buy it now because they're getting 100, 200% of the money. So there you go. There's your break. $8. And now you're getting 10% of the money. So $8, you got 20x off the 100 grand, you got 2 mil, making 10%. 200 grand a year. See, the biggest misconception about this particular asset especially is the expectation for hyper appreciation is the antithesis of the mindset to have for this type of asset being part of a portfolio. You got to think different. And my biggest encouragement for everyone is to not try and get rich. I think it's the stupidest thing in the world to try and get rich. I have no interest. I have no idea what the hell I would do with $100 million. And frankly, in this world, it would feel gross. I would be pretty embarrassed walking outside and going to work and knowing what is. I have a great deal of empathy for the world, and I would feel guilty and embarrassed, and I have no interest in it, so I don't pursue it. I have interest in being wealthy, and how do I define wealthy? If I can make my traditional salary by clicking buttons, to me that's rich. To me that's anything I could ever want, because now you have freedom of choice. You wake up in the morning and you could go to work. Or you could take a day, or a week, or a month, because the work is now your extra income. What is that kind of world where your job is the extra income? Now all of a sudden you have leverage. Now all of a sudden, hey boss, I'll be in next week. I'm taking a week. All right. Paid time off? Nah, no paid time off. Okay. It doesn't matter if they pay you or not. It's extra money. So now you get to work and do whatever you want. You get to pursue your passions and your dreams. So that's the type of shit that I think about. Anyway, so no, I know you asked me about curve, but that's why it's the story I just told is why it's so important to look at things differently and not rich, but wealthy, a portfolio that works for you in terms of income, reasonable expectations, reasonable growth expectations. And the most exciting thing about the crypto markets is reasonable growth expectations are insane compared to boring ass traditional finance. Can't do any of this in traditional finance. There's no opportunity like this in traditional finance. The boringest path that you could think of is Extraordinary compared in traditional financial terms. Food for thought. Now, maybe in 4 years' time, we're all fighting with Immortan Joe in some sort of post-apocalyptic Mad Max scenario, and none of this story matters. But that's not why we do this. We do this because there's no other alternative. Tina from 2020 and 2021, there is no alternative. I argue that that is the case. There is no alternative place to place capital that could potentially, even potentially, allow people to achieve really what they want. And that's not the whole rich shit. That's just the wealthy stuff that I just talked about. There is no alternative. Tina is alive and well, ladies and gentlemen. Never go all in, never spread too thin. Gotta have diversification and all those caveats that most of you veterans of the stream know. So, last thing I would ever want anyone, because people do bring up tokens. Curve in this instance, no. For the love of God, don't just go all in on anything. That just doesn't make any sense. Anyway, MDS. What's possible implications to risk assets arising from the yen issue? Volatility and risk. Could easily have big risk off. What is risk off? Risk off precedes intervention and precedes risk on. What goes down goes up. One person's loss is another person's opportunity. Volatility. So that's why entry price discounts are one of the most important topics of conversation. If you own stuff from 2022, you probably bought everything cheaper than it's available today. As Noah said, most everything's at a premium. Is that at a premium or a discount? Monthly chart. Look at the time weighted average price. Premium, discount, monthly time weighted average price. That's how you tell whether something's at a premium or not. If you really got some long term, you go out to the 3 month. It's at a premium. It's at a massive premium. Look at Bitcoin. Massive, massive premium. Yen blows up. Something crazy goes on. Bitcoin's at 48. Falling fast, 43. Falling fast, 37. Wicks down to 35. At the end of the month, it holds support on the monthly time weighted average price. That's a hell of a chart. That is a good looking chart. Perspective. Time. Zoom TF out. Don't buy at premiums, which also means can't buy, which is disappointing. The most important thing is that just because you can't buy doesn't mean you should feel disappointed. I know you're going to feel disappointed, but you need to train yourself to be like, that's expected. If you can buy at a discount, and that's a true test of self-control, buy things at a discount. If you buy it at a discount, then you have all the buffer in the world. That's kind of what happened with me with Ramses, because this is a big retrace. I bought it at like 1.8 cents. This thing was up at 20 cents. Great. It's literally the same thing I talked about with Curve. I don't give a shit about the hyper appreciation. How much is it paying? How likely is it going to continue to pay into the future? And obviously how much of the cost was relatively nominal, and because of the relatively low entry, there's a shitload of buffer. I'm not curious about today. I'm very interested in how much it's paying on Wednesdays. I'm mostly curious is its performance in 2025, Q1 2025. What's its performance in sometime in 2027? And I got it at a discount. So buy things at a discount, which means you're probably going to see very few opportunities. Patience. It's like pick the food chain, pick some sort of environmental, docu-series. It's like, ooh, the leopard stalks his prey. He hasn't eaten in 3 months. He's starving. Oh, It's not a good opportunity. He passes the opportunity. The leopard goes away and he finds something else. A week later, you might be starving for the opportunity, but unless it's a damn good opportunity, you walk away. And the prey was the discount. If it's not a great discount, you're taking a risk. And that's what happened with like Nile. Took it at $1. All right, maybe you got lucky. Where was the discount? You got a Nile at 14 cents. You don't give a shit that it's at $1. All right, look, I bought it at $1. 100% of the money, full retrace down to entry. That's what happens when you don't buy at a discount. And that also may invalidate entire positions. If you're very Buffety, Warren Buffety about your discounts, you may never be able to buy an asset, and that might be the right course of action. And you'll only ever know the answer to these types of questions in hindsight. Maybe there's a big, maybe geopolitical conflict, and Nile gets down to 33 cents. All right, now you're talking 15 cents at the lows, obviously lower, like 10 cents here, 100 to 300% premium, 30 cents. Now you're talking about a discount because you go on DeFi Llama and you see that Nile's at the top of the chart on Linnea and it's cranking out 10, 15, 20 mil in volume a day as everything's collapsing. So you look for the confluence suggesting this is a great business and it's mispriced. It's going down in price. All right, great. Where's it going down to? Inspect history. And that's why fib retraces are meaningful. This is a pretty interesting territory for a retrace down to like 382. It could go down further. Go down to 50 cents. Great, what we do. And same with Clio. Look, nice price action just above the 382. Inverse head and shoulders. Not an inverse head and shoulder anymore. Kind of was up here. Down to 382. Ramsey's big retrace down to 236. Let's go to the popular ones. Notice that I'm looking at solidly charts. Big tech. It's at the top of the volume charts. This is clearly heading to 236. That's a big retrace. You could probably finagle it down to here, but that's not really the most previous move. Finagle it down to here, and you probably go into 236. Same with Aerodrome. This is easily, obviously, it's breached with a support flipped resistance at 681. So this is directionally bearish. It's probably going to 0.5. And I don't see why it would stop there because if you go to 0.5, you just blew through this giant candle. And now you're going to 382. So there you go. It's discount. So who the hell bought it? $2.34. Oof. How's $2.34 compared to the base? 9 cents. 9 cents. It's a premium. You can't buy at a premium. You buy at a discount, which means you may never get your opportunity. Hope that helps. Hope that helps MDS. Arrow, FXS, horrendous. Oh, I don't even want to look at the damn FXS chart. But there is one perspective on the chart that may give you a little bit of comfort. The monthly. Listen, I bought all the way back here, 280. Listen, I tell everyone all the time, I have no idea how I got to where I am. I don't know, but it is, and that's the story that I tell. That's all I could ever do is tell the story. So I bought back here at 280. I watched it go to $52. That was what, 10, 20x on the money, and that was a relatively large position back then. And 447, up about 100% on the money. That's pretty cool. Can it break down? Of course. I am not here to tell you guys where the discount is. June 21, January. All right, that's 6 months. All right, so this is a monthly chart. Let's throw a fib retrace on it. Let's take a peek. Let's take a peek. Let's throw a fibby on it. Let's go there. I mean, you are in complete. This is all of this is discount territory. You're below 236. There, which is uncharted territory. This isn't price discovery to the downside. There's no one in any technical school. I mean, they would just say this chart looks like shit. My man Arrow, you did say it was bad. This is basically support is an expression of weakness. This is clearly a level of support because you had 1 month, 2 month, 3 month, 4 month, 5 month, 6 months, and this was the heart of 2022. So this is more bearish than like early 23. But then again, I don't know. It's a unique asset in many regards compared to the bullishness that started at the end of Q4 22, where everything bottomed structurally from a macroeconomic standpoint and liquidity. But this is clearly testing lows, 2022 lows. It's structurally significant, but in the end, the market will tell us what this means, what this asset means with regard to infrastructure. Don't fight the market. It's paying a decent number. It's paying 13% of the money. That's meaningful. 13% is over 2x risk-free. Risk-free is 5 and change. 13% it's a pretty big deal in financial terms. Not easy choices we make. Good to point it out though, because I would argue this is a very important asset, and this will be a big deal in 5 years, in a decade. It's literally has all the full vertically integrated stack, and now it's got its own chain, which is optimism, and it's plugging into every chain. It's always been jaw-dropping from a tech stack perspective. But I often say the best tech is not always the best investment. But then again, what is the best investment? The best investment is appreciation. Clearly, this is not the best investment. But if the best investment is not down, which is what I talk about with Curb, not down, but it's paying, then the thing that's not the best investment to someone may be a pretty damn good investment to someone else. And that's something I think quite often with regard to my Curve ownership over the years. Very cool. Thank you. Gee, you're silent like lasagna, by the way. Oh, Balsam. Balsang. Balsang. Sung. Lazang. Balsang. I got it. I got it. See? I get things. I'm not too old. Not too old. Much appreciated. Thank you for the commentary. Please, anytime you had anything on your mind. Irreverent, hey, it's true. Many will make a bank and lose it quick. Yeah. So what matters is higher lows. Over what time period? I would say 4-year time period. If you have more money now, more capital, portfolio value, than you did in 2019, that's interesting. And if you're making money on a weekly basis, that's even more interesting. So I think there's plenty of different ways to inspect the portfolio that is not status quo. That's different. And that'll be strange to the average, to the general public, and that's okay. It's okay to be different than anyone else and measure things differently and have different opinions and have different goals and expectations. And then someone, oh yeah, I made $5 million trading meme coin. Cool. That's okay. I paid my bills last week. I'm sitting in the backyard by the pool. I sure as hell didn't make that kind of money, but able to pay property tax, able to pay the cars, able to buy a new roof, able to do this, able to buy a car, not even finance it, but I don't even think that's a whole other story. Probably actually decent time to prices are collapsing. That's another story. Point being, that's all I could ever want. Anyway, stay safe out here, rational folk. Yes, indeed. Appreciate it. Dan, what do you think the new Kingdom assets will land by next bear lows? We have no idea where things will land. I think we have a sense of what chain they'll land on, but it's irrelevant. They're not here. It's kind of the thought I have about tapioca. Very exciting, but it's irrelevant. It's not here. We will only know today the conditions of a protocol, the properties of a protocol when it launches. and how the market receives it. So you judge things based on today and what's occurring today, and avoid that emotion. It's good to be excited to a degree, but understand being excited doesn't do anything good. When you get excited, the only thing that happens is usually disappointment. So avoid it and focus on today. And then every week comes around on a Wednesday and a Thursday, and you get the click claim, and maybe you're lucky enough to claim a couple $1,000s. And that's pretty damn cool. To me, that is extraordinary. But I'm different. So maybe I'm the crazy one. Hey, Cat Maxi is never the way, never makes sense. You're right. Well, here's the thing. I appreciate and understand all perspectives. I'm just an ever struggling. Uh, I digest all perspectives, like Bitcoin maximalism. Like, can I say that I'm a Bitcoin maximalist? Because I think I understand what they're talking about and I agree with them. So I am a Bitcoin maximalist. That it's just a remarkable money. It's an asset that has a degree of moneyness, and it serves cash very well because you can finance settlement. You could throw it on a debit card. You could use it as collateral. It's highly fungible, liquid, portable, so on and so forth, censorship resistant, confiscation resistant. It's a great money. Clearly, monies can be compared, degrees of volatility, and in that regard, you have spreads, the spreads between money, which is the FX markets of sorts. So I very much like Bitcoin as a cash and use it as a cash. And I think it's probably the best cash that, like Jack Mallers says, it's probably the best cash ever, the best money ever. I like that. I agree. But I also believe in investing and owning business. And I believe in the concept of cash flow, because the only way you can buy Bitcoin is if you trade time for money working to buy it. And that's the whole concept of savings that they talk about. But I don't want to work anymore. I'm old. I want to buy businesses. I'd be an entrepreneur and start a business, buy a business, kind of similar. If you could buy at the right time, buy at the right price, buy at the right discount. Okay, so if you have enough businesses where you have an income, you have cash, you can buy more businesses. You can invest, and you can save some of that money in varying denominations, because varying denominations change in value over time. So that's why I compartmentalize the portfolio into cash and investments. The cash is really where I see myself as a Bitcoin maximalist. Doesn't mean you hold Bitcoin all the time, because there's periods in time you look up the technical data where the dollar is screaming versus Bitcoin. And I show people this every now and then. Just accept reality. This is real. Between November of 2021 to November of 2022, in 1 year, the dollar went up 343% compared to Bitcoin. It appreciated significantly compared to Bitcoin. So that means your cash, you can't hold on to it. So I'm not a maximalist in the sense that own Bitcoin no matter what. I'm a maximalist in the sense that fuck yeah, if I could own Bitcoin and it's not collapsing in value versus another money denomination, great. That's the preferred denomination because of all its properties. But you got to be responsible from a capital management standpoint. So I generally favor Bitcoin and cash and dollars right now. And I'm not even really thinking about Ethereum. Like Ethereum, I think in terms of it's probably going to outperform Bitcoin. I think that is everyone's general consensus at some point. And Solana will further outperform Ethereum. And clearly, other gas tokens will outperform Solana at this point. Gas tokens I define as an asset that has a degree of moneyness. And you could compare all of them based on the degrees of moneyness, with Bitcoin being just the pristine crypto money. So I don't really accumulate Ethereum as the cash part of the portfolio. I think of Ethereum as something that's spendable. Why? Because that's exactly what you do with Ethereum. You spend it on gas. You spend it to do transactions. You need to buy it because you need it to engage in things that make you money. and you could also buy businesses with it, invest in businesses with it, and then just vary the cash position depending on really the currency situation. Bitcoin and stables. Anyway, isn't that weird for me to say I'm a maximalist that invests? So tell a different story. Tell your own story. Take everyone's stories and say, oh, that's cool. That's a good story. That's a good story. And make your own story so that this is my story and how I define why I do what I do and how I think about things. DeFi Advisor, what an hour to see the cap live. Yeah, lots of good comments today, lots of good conversation. I appreciate it. I appreciate the questions and the commentary because that lets me brain dump, and we get to have fun. Good time always. Question, sir. How should protocols address marketing in your opinion? These are businesses, how they should build marketing in general. So the complexity is it's a business of no staff, of no employees. So the developers optimally see themselves as part of the investor class. And that offers great perspective. And I know almost all the teams in Solid Protocols do see that. They see themselves as that. So that means they have either a sizable investment in their own business, or they've structured tokenomics as such that they do have dev allocations and whatnot. But I think that a healthy balance sheet is critical, meaning you can't just be dumping tokens for purposes of marketing because that's going to destroy the balance sheet. You can't just literally negatively affect the chart of thinking in the long term that marketing will overcome depreciation. So as you're capitalizing on your dev allocation, it's not necessarily the most rational way to think about things. I think Frax is the prime example of how to manage these businesses, these crypto digital businesses. They have a fully solvent balance sheet, and the way they've restructured FXS currently, every drop of income is going somewhere. And if you want to build marketing, you need protocol-owned liquidity, and that's not like dev-owned liquidity. I mean, theoretically, if the devs have that much passion about the business they created, they can invest income into the business. That's great, and that benefits everyone that owns a part of the business. But the protocol itself, it's very interesting. And what's the best kind of marketing? Pay people. So maybe marketing isn't really required. It's like build it and they will come. And what's the best marketing in that regard? Percentage signs. And then time. And the beauty of these protocols is survival. So time is kind of baked in the cake. So I happen to think Frax has really killed it in that regard. Protocol and liquidity. You know who also killed it? Aladdin. Who the hell owns all that VLCVX? Cleaver. And look what the hell's going on with F of N. Oh my God. And how much curve control they have with Concentrator. So these are interesting things. And what matters most is honorable perception, especially when there's a bit of centralization and governance control, concentration of control. That is critical to get right. There's no coming back from mistakes. It really isn't. It's like first introductions. You got one shot at a first introduction. And when finance is involved, you got one shot at this. There's barely any protocol that makes it back from like a hack. Barely. It's one shot to get it right. It must be a flawless presentation of honorable, a flawless presentation of diversification of vested interest. Excessive concentration is very much detrimental to the health of a business. These are just important things to consider. Marketing requires either the altruism of a large investor or a protocol that is inherently designed to build its treasury. And that treasury can then be voted on in governance to, all right, yeah, let's rent X ads, or let's do whatever marketing that you have in mind. Because then the treasury and the protocol of liquidity is accumulating capital, and then governance can deploy that capital. And optimally, that capital denomination is stablecoins, cash, dollars, because then it doesn't have a potential to detrimentally affect the price point of the business's asset, because that negatively affects perception of the business, and you don't want to do that. Interesting thoughts, DeFi advisor. Not simple, but it's all business oriented, and business is a lot of PR, public relations. Jupe Vol is looking good as well. Yeah, I look at. I don't care. It's not something that I am interested in. Got a nice airdrop. This would be. It's a liquid asset, so it's part of the cash, part of the portfolio. What are you going to do with it? The only thing it serves is to sell it after a bunch of other people buy it. So I put down capital gains activity significantly. I don't think it's a sustainable mentality. It's a cash grab. All capital gains, no matter what, is always a cash grab, even Bitcoin. It's a cash grab. Now, if you treat Bitcoin more structurally, you're talking about like Michael Saylor mentality, where you're accessing its collateral and you're borrowing against it. And then it gets more strategic. But if you're buying something to sell it, that's what everyone does. And the last thing I ever want to do is what everyone does, because everyone doesn't win. The few win. CVX isn't any better in my opinion. Thoughts on that chart? 250. Oh God, this is literally looks exactly like Curve. Obviously, the beginning is structurally different, but look at the lows. It's all like not going down. But the same thing I said with Curve, not going down is in itself interesting. No interest in new protocols right now. Arrow. I think investor season is either over or coming to a close, either because everything's at a premium. Clearly, this isn't at a premium, but I already have, and I don't have enough to increase position size meaningfully. Like if you have like 25%, 50% increases in position size, you need capital. So right now I'm in kind of accumulation mode because I need capital for some real world things also. So investor season is coming to a close partially because of the premiums in the market, but also because of we've been buying discounts and we've added the portfolio. Anyone who's been in this market for years, your portfolio looks very different right now compared to the middle of 2023. You have bought probably a fair amount of things. And that's what we've done. So I'm not really interested in any additions right now unless it's like, oh my God, it is very mispriced. And I have an adequate amount of capital to attain an appropriate position size. Position size is critical. If you cannot have an appropriate position size, you must invalidate the mere thought of taking an investment position. Because it's just going to underperform any possible expectation. Ola from here, Chief. Much a pleasure. Irreverent. Thanks, Cap. I like the tapioca POL approach. POL changes the entire equation because then it's literally capital this autonomous business is accumulating, and then governance can deploy it. Very interesting. Diego's in the house. Much a pleasure. Last question. We're going to wrap it up unless maybe one trickles in. Are you interested in the perpetual business? Let's pop it up. Seems to be a great way to capitalize on the future volumes and speculation. Okay. Business. Check. Yes. Future volumes and speculation. No and no. For me, gambling is a big business. Las Vegas is big business. Casino is a big business. I'm not too interested in that because it's not the biggest business. The biggest business on the planet is banking, and banks offer services. The primary services they offer are credit and foreign exchange, and I don't see anything else as bigger. The fact that you could own a bank. So that's the biggest shortcoming of people, especially novices coming into the crypto space, when they look at things like not really Uniswap, because even liquidity providing is a historic process. Like Bernie Madoff's legitimate business, he was one of the most epic liquidity providers who save the markets, aside from as a legal business. That's another story. But if you're talking about like even abracadabra, CRVUSD, Aave is a money market, MakerDAO, CDP. If you're printing dollar stables, not like USDC, USDT, but if you're a collateralized debt position, that's credit. You're printing liabilities. Those are bank deposits. And foreign exchange is literally any of the exchanges. So if you're getting cash from transaction fees, you're the owner of a forex market. So the most important thing you can do and tell everyone about crypto, you have a capacity to own banks. And it might not be labeled a bank or in the stock market. That's irrelevant. If it walks like a bank and talks like a bank, it's a bank. Might be a small bank with millions of dollars and not billions and trillions of dollars. I don't give a shit. It's a bank. These businesses, especially the ones that I look at, are banks that provide credit and foreign exchange. Some of the stuff I own does derivatives, but it's mostly credit and foreign exchange. These banks that I own are not in the United States or in any country. These are offshore entities. The capital that has been invested and the capital that is produced is expatriated, and you're importing the capital. This is cross-border, and that is a very different perspective than most people have on these crypto markets. As the, you know, I can't pull up the here. I could do this. Nope, that doesn't work either. If you look at the imagery, it's Stranger Things, Stranger Chit. That's another story, but Stranger Things. It's upside down. This is weird. You could buy a bank, but why are you going to look at this like every other, kid in high school that wants to buy a meme coin? Be an adult about these things and really look at them like, holy shit, this is really, really big stuff. Really big. Like banking big. Hope that helps, ladies and gentlemen. Let's wrap it up for today. It's a long one. Friday, April 26th at 4:58 p.m. I wish you all a wonderful day. Tell everybody to subscribe. Discord changes. I'll pop some post on X so people could get a sense of what the hell choices they have. And I wish you all a wonderful weekend. And, stay rational over the weekend. And I'll see you next week on a Monday. Catch you then. Peace.